News is that we've touched an all-time high of 24,000 and 79,000 for Nifty and Sensex respectively. So congratulations to all those traders, investors who are there in the market for quite some time. So congratulations, I'm sure your portfolios must be doing well. But at the same time, one concern which always is there when the markets are doing well, that should we book profits, should we exit and go to some other asset class. So we're going to talk briefly about what we should be doing in such a market scenario. So before we move to what we say as what should we be doing, Sensex 79,243, that's today's close, which is 27th June. Five-days return is 2%, 1 month return is 5%, 6-month return is 10%, year till date return is approximately 9.6, which is the same thing. 1 year return is 25%, and 5-year return is 101%. So clearly we are in a bull run cycle. As far as Nifty is concerned, today it closed at 24,044. 5-day return is 1.84, 1 month return is 4.85, 6 month is 11%, same as with YTD, and 1 year return is 27.78%, and 5-year return is 103, 104%. As far as the broad based index is concerned, which is called BSE 500, the combination of top 500 companies by market capitalization, today it crossed 35,600. 5-day return is 0.76, 1 month is 4.87, 6 month is 16.72, and 1 year is 38.74, and 5-year return is 132%. So the broad market, which is the top 500 stocks of India, has actually surpassed and outperformed the Nifty index and the large cap index. As far as the mid cap is concerned, today it closed at 5,967. 5-day is 0.8 minus, 1 month is 4.96, 6 month is 26.68, and 1 year is 61%, and 5-year is 210%, almost double of what the large cap index gave. Similarly, small cap, today's closing was at 51,842. 5-day return is 0.77% minus, 1 month is 8.11%, 6 month is 22%, 1 year is 59.95%, and 5-year return is 264%. So this has actually been the best out of the 3 categories or 4 categories which we are talking about. Now, do we see some observations in this? Now, I'll show you again. 1 day and 5 days return for Sensex. 1 day and 5-day returns for Nifty. BSE 500, 1 day and 5-day return. BSE mid cap 1 day and 5-day return negative. 1 day and 5-day return for small cap negative. So the little point which I am trying to make here is that, are large caps driving this rally? Are small and mid cap due for correction? So all these things will be going on in investors' mind, and that is what we have to address in today's video. The idea is that in case if you are sitting on good profits, you've just kind of made what you wanted to make, should you book profits? In case you've just entered the markets like a week, 10 days, 15 days back, so you've just started to make profits, maybe 1, 2, 3, 4%. So should you be exiting the markets now, or you're already sitting heavy on cash, thinking that the markets are going to dip from last 1 month, 3 months, 6 months, 1 year? You've been sitting on cash and you're thinking that should I enter? So now there is no, you cannot be exiting because you did not enter in first place, but should you be entering at this level? So all these things are there in investors mindset. So let's understand one by one. One is book profits, somebody who's been here for some time. Second is enter with fresh money. somebody who's been waiting and the markets did not rise. And third is kind of simply stay invested, because you've just say just entered in the market from last 1 week, 1 month or so. It can be also be true, it can be true for long-term investors who've been in the market for some time, long time, and they want to be in the market for some more time and some more longer time. So stay invested. So that's all a question mark. So simply as an investor, what you're supposed to be doing is that you'll have to do something called as asset allocation, which means check your respective portfolios. How much is large cap, how much is mid cap, how much is small cap, how much is exposure to Indian stocks versus US or foreign stocks, in case if you have. At the same time, other than equities, check which all asset classes you have: equities, debt, gold, silver. Maybe also you can check on cash component, FD components, your real estate components. So all these things is something which you need to check on as to how much exposure you have for all these things. So that is asset allocation. Now also what you need to follow is the rule of liquidity, margin of safety, cash flow. So supposedly you do not have 3 months, 6 months, or say 12 up to 12 months, depending on case to case basis. If you do not have that much of cash flow visibility via your regular income, via your rental income, via your passive income flows, whatever be it, in case you do not have visibility, then probably time to partially book profits or partially liquidate from some high beta, you can say funds, high beta stocks which are more volatile, or which can be more volatile, or which have given a good run up, can give a further run up, but you've actually kind of hit the target. So might as well book profits for cash flow for the next 3, 6, 12 months, in case you do not have that, for liquidity. And in case if you don't have any purpose, then just for unknown reasons which you really don't know, some money. It should not be the entire portfolio, maybe 5%, maybe 10%, maybe 15, 20%, but not more. This is for unknown reasons I'm talking about. Then in case for all those folks, for all those investors who feel that there can be a 10%, 20% correction, then probably 20% or so portfolio can be reallocated to something called as balanced funds, something called as debt funds, something called as cash liquid funds, just purely from a opportunity fund point of view, that okay fine, markets are all time high, we feel that the next 6 months, next 12 months we're going to hit another 5-10%, which I can easily make through balanced debt, cash or liquid funds. I need not take too much of risk, and whenever the market gives us a good opportunity to enter, then might as well enter with this 20% portfolio in say two chunks, or maybe 3, or maybe 4, which means that if you have 1 crore of portfolio and you liquidate 20 lakhs today, put it in something called as balanced debt or liquid funds, then maybe with 5 lakh rupees in the next 4 tranches, whenever the market gives a good opportunity to enter again, then you can so called use this as a opportunity fund. Apart from that, in case you feel that some expenses which were due, like buying some personal assets for yourself, or utility items for yourself, going out for a vacation, or maybe upgrading your skills or upgrading your self to a new level which requires some resources, some money, then again maybe you can use 5-10% of your profits there as well. 5-10% of your portfolio or profits, depending how big or how huge the portfolio and the profits have been respectively for you. in case if you feel that you are a long term investor and all these things in the medium term really does not matter to you, then simply you need to stay invested. However, we would still advise or still recommend all those set of investors to actually go ahead and do the asset allocation and just review your goals. And in case if you don't have any short term or mid term goals, then might as well make them, because you would need money for some short term and mid term surprises, be it negative surprise, maybe positive surprise, but you should have allocation for short term and mid term as well. Short term is something which is 0 to 3 years, mid term is anything between 3 to 7 years. So the market cycle is generally of 8 years, so anything above 8 years if you have saved your, or if you are investing your money for, then there is no worry at all. One should just keep calm, stay invested and just do nothing. But in case you have some short term and mid term goals between 0 to 3 years and 3 to 7 years, then time to actually do some reallocation. So that was a little bit on what one investor should be doing. Other than that, within the equity domain, one would obviously want that what we should be doing as an investor. So one is obviously direct stocks, one is through ETF route, one is through mutual fund route, and one which we are fond of is model funds. So these are the primary retail investor routes which one can go with. So stocks generally, I would say large cap are still holding value in terms of not being too pricey. They have not given a good run up in the last 1.5-2 years. So we still feel that there is a lot of value in the large caps, and the risk reward ratio is still in favor of the large caps as compared to the small and mid caps. As far as small and mid caps are concerned, you'll have to do your due diligence, you'll have to do your research, you'll have to do actually the 8-step process for building a portfolio in terms of your mid cap and small caps, and that is where mutual funds come in. In case if you are still wanting to have exposure through those in the small cap and mid cap space, then model funds is the answer. In case if you are looking for some thematic solutions like maybe IT, maybe pharma, maybe consumer, maybe defense, so ETF is the best route where you can go with thematics. But this is like maybe buy on dips, and the ideal strategy would be to divide your money into 4 parts, which means if you have 10 lakhs to deploy in thematic schemes, then might as well start with 2.5 lakhs today, and then slowly gradually on every dip keep on investing 2.5 lakhs. Choose 2 or 3 schemes or 2 or 3 ETFs or 3 or 4 ETFs and keep on deploying funds accordingly. As far as model funds are concerned, so again, basis on which theme are you going? If you're going with a large cap theme, no problem. If you're going with a multi cap theme, then no problem. But yes, if you're going with a small cap or a mid cap, then at least a horizon of 5 years and above should minimum be there for you not to be negatively surprised with the market conditions. So in no way are we saying that the markets are going to dip from here, but at the same time, when all things are going good, when all things are going as per plan, then it is time to replan, and that is what precisely we are trying to give you an idea in this you can say video. So I think this is what we wanted to communicate more or less. And so coming back to this breaking news thing, so markets all time high at 24,000 above, Sensex, Nifty is at 24,000 plus, Sensex at 79,000 plus. Time to review, time to rebalance, time to restructure, time to do asset allocation, time to see what your short term, mid term and long term goals are. Are you very far away from the target? Have you hit your targets? In case you've hit your targets, you already have achieved what you required, then probably do some asset allocation and move from short term to mid term, or mid term to short term, and long term to mid term, or short term to mid term to long term. What I'm trying to say is that it's time to review, time to restructure, time to rebalance your portfolio. Please do your due diligence, replan, review, keep reviewing your portfolio, see where you can say more value are in terms of your money being safe as well as giving you good returns. We've given you some ideas in terms of what you should be doing. The whole purpose of this video is to make you aware that in a good bull market you should first stay invested in this entire bull market, because otherwise you will miss the rallies. For people who've not entered in this bull market from the last 1.5 years are already feeling the pinch. From here also the next 3, 5, 7, 10 years look very very nice. At the same time 5, 10, 15% of corrections cannot be ruled out. That is why we say keep something in emergency, keep something in liquid, keep something as opportunity funds, and keep deploying money, you can say in phase manners into various categories as per your risk profile, as per your previous asset allocation, as per your new, you can say, goals, new requirements in terms of your short term, mid term and long term. The whole idea is that you should have peace of mind and you should have a good night's sleep every single night. So thank you so much. In case if you think you need a one-to-one session with us, the details are given in the link, and you may book a call with one of our team and wealth experts, and we'll be happy to connect. So thank you so much. Till then, thank you.